Data out today indicated China's economy is slowing, so what could the consequences be on the rest of Asia? And could China's Renminbi scheme attract investors and add some optimism into the markets? Joining me to discuss is Rajiv Biswas from IHS. So Rajiv, Chinese consumer prices eased in September, while producer prices remained firmly in deflation, adding to speculation of additional monetary easing to shore up demand in China. So how would you describe China's economy at present?
The Chinese economy has been experiencing a slowdown in economic momentum during most of 2015 to date, and the latest indicators are still showing that momentum remains soft. The latest trade data did show that exports are still declining, as they have been for the last couple of months, and industrial production has also slowed down considerably compared to the last couple of years. A particular concern has been the weakness of fixed asset investment, which has also slowed significantly over the last couple of years, particularly due to the downturn in the real estate sector, which has resulted in a slowdown in construction investment. So in the context of all of those indicators, the momentum still looks relatively soft, although the government has been taking steps to try to stimulate the economy using both fiscal stimulus and monetary stimulus, with the central bank having eased a number of times this year, particularly during the period when the stock market was in a state of rapid decline and even crisis, I would say. So I think when we look at the latest inflation data and relatively moderate consumer price inflation and producer prices actually still in deflation territory, it does give scope for the central bank to ease further.
Import prices have fallen for an 11th straight month. This has rekindled concerns that China's slowdown will spread. This news has unsettled global stock markets, so what impact could this have on the rest of Asia?
I think the broader concern that we're seeing in Asia is the weakness of real demand, rather than just the decline in import prices in China. We've seen declining exports year on year in South Korea and Taiwan, also in some of the Southeast Asian countries such as Indonesia. And the most recent trade data coming out of Taiwan is also very negative. And part of the reason for those very negative numbers is that exports to China have actually been declining, and so that's, I think, one of the big concerns across the East Asian region right now, that demand out of China is still relatively weak. And it's not just weak for commodities, but it's also weak for manufactured goods, and that's why we're seeing Taiwanese exports, South Korean exports to China are actually declining right now. So I think this still remains a key concern, that if Chinese momentum doesn't stabilize and indeed improve, that the outlook for a lot of East Asian economies is going to be relatively sluggish in the coming quarters ahead. It's not yet at a stage where I think across Asia we would be concerned about a recession, but momentum certainly has been slowing down due to this decline in export growth.
London has been chosen to build an offshore centre for renminbi exchange and investment. The scheme has been described by some as a major step in developing this market infrastructure, with investors still having a huge appetite for trading offshore renminbi irrespective of the recent market volatility. What impact could this have on China's stock market?
I think that the development of the renminbi as a settlement currency through offshore trading has been an important step in the internationalization of the Chinese currency. And I think one of the big questions looking ahead over the next couple of years is, at what pace can China move forward? However, I think despite their efforts to create offshore settlement for the renminbi in major international financial centers such as London and Hong Kong, this really will not help in terms of their stock market, the fundamental story with their stock market is that it was a speculative surge that started last November and came to a grinding halt in June with a deep slump in the market after that. So I don't think there'll be any return of significant purchasing into the stock market until the fundamentals of the Chinese economy turn positive and create some fundamental reasons why there would be a return of confidence in the outlook for Chinese shares. And I think the medium to long-term outlook for China is still that it will be a very dynamic economy in many ways, particularly the development of the Chinese consumer market, which will create a lot of opportunities in many service sector industries and indeed in manufacturing as well. But I think that's a story that's yet to unfold in terms of what it means for the stock market.
Well, Rajiv, thank you for speaking with me today. That's all from myself today, but be sure to click back throughout the rest of the week for all the latest updates. Goodbye for now.